Good morning, everybody. This is the live market open for Thursday, November 5th. I'm Yohay, Elam, a Forex Crunch and Market Movers podcast. We'll be covering the market for FX Street. We have a lot to talk about, as always, recent developments in markets, charts and levels, then the next 24 hours, and of course, your questions. If you can't see the chat box under the video, please go to tlk.io/fxstreet-forex-live-video. And let's first of all talk about the stronger US dollar, the main thing on the news today. So here's euro dollar as we speak, falling to new lows. 108.33 is the low, very close to the critical support line of 108.10. And this is, of course, a continuation of what we've seen yesterday, and we're seeing the same strength in the US dollar also across the board. Also, for instance, dollar yen broke above the triple top at 121.50. Dollar CAD, Aussie dollar everywhere. So why is the US dollar stronger? Okay, let's list 5 reasons. Some of them are in the data. Okay, so we had yesterday, first of all, ADP NFP at 182,000 as expected. Now, after so many bad figures from the United States, this good figure, of course, not anything earth-shattering, but good enough, and it was dollar supportive. And this raises expectations for the non-farm payrolls on Friday. Second thing we had is ISM non-manufacturing PMI. This already came way beyond expectations, 59.1 points. Expectations stood on only 56 point something. Anyway, also the employment component came out much better than expected. So yeah, expectations stood on 56.5 and it came out 59 points. Excellent news. It's the services sector, the biggest one in the United States. And of course, it also raised expectations for a good non-farm payrolls. And then we had a few talks from number 1, number 2, and number 3 in the Fed. So Yellen, first of all, said that December is live. It's not something that we haven't heard before. Because we got that big hint on the Fed statement that December that they're going to consider raising the rates in the next meeting. But the fact that she said it, and in a testimony that wasn't focused on monetary policy, but actually on regulation, and she did talk about that, that was, of course, good news. Secondly, we had number 2 in the Fed, Stanley Fischer, the vice chair. He talked also about December as live, and he was also quite upbeat on inflation. He said that, okay, currently we don't have high inflation. There's this thing of oil prices and a stronger dollar, but in general, inflation is getting really close to target. And then we had number 3 at the Fed, Bill Dudley, talking about also that December is a live meeting. No decision has been made yet, but they're, of course, getting closer. All of them did raise, of course, some doubts about the unemployment rate. They said that the unemployment rate is a bit sort of overstating the real situation of employment, but that's something we already heard from the Fed many times in the past. All in all, good news for the US dollar, good news for the expectations for rate hike. Let's show you the implied probability of rate hike according to the CME group, according to bond markets. So we have it right here. It was around 50-50, now it's 56 for a rate hike and 43 against. Remember that after the Fed, it came closer to 50-50, but now we have sort of markets leaning, bond markets leaning much more closely to a rate hike in December. So we had these kind of reactions. Yesterday, we talked here in the show, we were talking, will euro dollar be able to break under 109, yes or no? So the answer is yes. It began after the ADP report, but continued, and now we're seeing even lower lows, okay? So it's, of course, all the 5 factors I talked about regarding the dollar, ADP, ISM, and the 3 members, 3 musketeers at the Fed, if you wish, Yellen, Dudley, and Fisher. But also the euro has its own reasons to fall. For example, or the main thing this morning, we just had it soon, we had German factory orders. So month over month, markets were expecting a rise of 1%, and the actual figure was a fall of 1.7%. So it's a really big miss. So this is bad news. It's important to remember that factory orders are always a bit volatile, sorry. But in any case, it's not good news. This is for the month of September. Towards the end of the month, the issue of Volkswagen broke out. Yesterday, we learned that Volkswagen is in deeper trouble than we thought. Also, gasoline cars have issues. And so markets see this bad news from just when the crisis began and expect, well, it can only get worse. And year over year, also expectations, last month it was 1.7, and this one a drop of 1%, so more or less mirroring the other numbers. Anyway, it's not good news for Germany, and that's another reason euro dollar is falling. 108.42 current level, 108.33. I mentioned 108.10. Why is that? For those of you who haven't been to the show in recent days, I mentioned this level because this is here, the July 20th low, which was the lowest level actually since March. Since April, when we hit this level here, just above 105, and the 12-year low here of 104.60. Anyway, once we fall below this line, we're at the lowest levels in over 6 months. I find this as a critical support. The low so far has been only less than 30 pips from that line. Anyway, a round number also to watch is, of course, 108. So that's the zone 108, 110 we're watching. Currently, well, as we speak, euro dollar is marginally stronger, but all in all, you can see this trend. It's falling for the 4th consecutive day, mostly on US dollar strength, but also on what Mario Draghi said. Okay, below this level, we have 107.11, but it's not really strong because this was support here, but it's not really as strong as, of course, the lower levels that we've seen here, for example, or here. So 105.30 and 104.60. Okay, so these are the levels on the downside. On the upside, let's move back to the hourly chart. We have 108.60 is sort of weak. No, we can erase this line. It's much more the 109 level. 109 level is where the pair stopped after the Fed, and then 109.50 and 110. 110 to 110.70 was the previous range. So that's euro dollar. Pound dollar, we have currently 153.85. Still strong in range. The range is well, let's widen it just a bit. It did dip below, it widened its range once again, 153.60 to 155. Yesterday, we had good news from the UK. We had services data, like in the United States, coming out better than expected, 54.9 points. That's like in the US, it's the biggest sector also in the UK. And we had the pound rising. But there's tension because today is Super Thursday. And it's a big day for the pound. Today, the focus is on the pound. We have a break from the US dollar until tomorrow's non-farm payrolls. So what do we have on Super Thursday? Okay, we have at 12 GMT, we have 3 events coming. Okay, let's show it here. You see the calendar is full with UK events. But in general, we have 3 things happening. First of all, it's the rate decision. No change is expected. The Bank of England is expected to leave the interest rate unchanged at 0.5%, the same rate since March 2009, 6.5 years, and the QE program unchanged at 375 billion. Last time it was changed, I think, was back in 2012. No change here. The big question, the immediate question is how many members voted for a rate hike and how many voted not to change rates. So in the past 3 meetings, we had 8 out of 9 members, including Governor Carney, deciding not to raise rates. Okay, very expected. But 1 member in the last 3 meetings decided to vote for a rate hike. That's Ian McCafferty. Because we get the meeting minutes already now, that means that we already know who voted for what. So markets expect no change, 8 against him change and 1 for change. I think if it remains like this, it'll be a little bit positive for pound dollar, because it still, of course, keeps the rate hike high on the agenda. And the UK is expected to raise rates after the United States. So perhaps we'll see the pair bounce a bit higher from the current, within the current range. That's the baseline scenario. The second scenario for the Bank of England is that another member, perhaps Forbes, she's a relatively new member of the Bank of England, of the Monetary Policy Committee, and if we'll have 7 against 2, it will of course raise the stakes for rate hike coming sooner than later. That would be very pound positive, perhaps a break above 155. But that's a low chance. Another low chance is that all 9 members, including Ian McCafferty, will vote unanimously against the rate hike. Okay, so in this case, of course, we'll have a higher, a weaker pound. That would be negative. Now, in addition to the vote pattern, how many voted against and how many for, we also get in this event the meeting minutes, what they talked about. This is, of course, not the immediate reaction, because it takes time for markets to read that through, and the voting pattern is much easier to dissect. So we have this event, the meeting minutes. If they see wages, for instance, are positive, but inflation in general is relatively low. What else? The state of employment, growth prospects, the state of the Eurozone, of course, as always, all these kind of things. So these are sort of the main things to watch out for. But that's not the only document that the Bank of England releases, okay? Because once every 3 months we have the Bank of England releases its inflation report, okay? What's the inflation report? The quarterly inflation report, QIR also called, already provides wider measures. It includes forecasts of inflation. This sort of fan chart, perhaps you've seen it, of this fan widening up. What do they expect for inflation? Is it higher than they expected in the previous report in August, or lower? What about wages? What about growth? So this is a very important report. It always moves markets, sometimes 200 pips. Perhaps it'll happen also now. I don't have a guess or an estimation about what will happen there. I don't know if it'll be better than expected or worse. Data recently from the UK has been better than expected, so perhaps we can expect some kind of more bullishness. But also it's important to remember that the Bank of England will not move before the Fed. So that's the quarterly inflation report. Lots of data, lots of headlines. It's released at the same time, 12 GMT, but it'll take time for markets to respond, because first they look at the voting pattern of the rate decision, then the meeting minutes, and then the quarterly inflation report. It'll be a mess of headlines at the same moment. I'm generally a bit more bullish on the pound, perhaps less against the US dollar, more against the euro or the yen, but that's the main event for today, the pound, all these 3 things. And we'll be covering it, Valeria Bednarik, Mauricio Carrillo, and myself. We'll begin the broadcast at 11:45 GMT, 15 minutes before the event, so you're welcome to join, of course, on FX Street. And that's not the end of the pound event. Maybe it's too much, but at 1:45 GMT, we have Mark Carney, the governor of the Bank of England, talking about the report, being asked questions by the British press, and they really know how to scrutinize policymakers. So I believe we'll have a lot of action also during his speech. Carney personally tends to be a bit more hawkish than the collective wisdom of the Monetary Policy Committee. Okay, so and sometimes when he says something that sounds a bit more hawkish, and then he talks in the name of everybody, these statements are conflicting and confusing. So it's going to be quite choppy. Trade with care, not with too much leverage. Okay, so we've covered the pound, but that's not the only event today, of course. Let's look at what else we have here. Yeah. So we have before the pound, we have Mario Draghi talking for the third time. In his first appearance this week, he reiterated that all the tools are on the table, that they're ready to act in December. That weighed down on euro dollar, of course. In his second appearance yesterday, he didn't say anything new. He wasn't talking about monetary policy. It was a bit disappointing. And this time, I'm not sure what he'll talk about. So, good morning, Fabian. What about the impact of Bank of England on pound yen? Sure, let's jump to that question. We just talked about the pound. So, pound yen. First of all, pound dollar is stable in range. No, pound yen. Pound yen continues its move higher. Why? A weaker yen across the board, getting carried away with the stronger dollar. We'll talk about pound CAD immediately afterwards. Sarah, good morning. So the yen is weaker against the US dollar. Pound is relatively strong because, as I said, the Bank of England is expected to raise rates after the Fed, and we're expecting also for perhaps some more bullish news, hawkish news from the Bank of England today. So in general, we're seeing it rise higher. I must say that the move is very choppy here. The high so far 187.43. I believe if as I expect, it'll be relatively bullish from the Bank of England. We could see the pair continue higher. Where it's getting closer to strong resistance here. The highest level in September, 188.10. It's an important level to watch. It's the highest since August, since the big crash. Anyway, that's an important resistance line. I believe we can challenge that on pound yen. Support in any case 186. Well, not anymore, I would say. Perhaps this line 186.32 is a stronger support. Anyway, I think there's room for improvement here. Now we have a question from Sarap about pound CAD. Let's put the chart on the screen. It ran away. I'm sure I had it right here in the list. Well, set it on the screen anyway. Oh, sorry, that's not this one. Here we go. Yeah, okay, we have all the lines. We drew on it yesterday. Also here we're in a much tighter range because oil prices were relatively strong that supported the Canadian dollar. Yesterday, we've seen the Canadian dollar slide against the US dollar like all the other currencies. But the pound gained some strength because it was a bit more resilient against the US dollar than CAD. Still a very narrow range in relative terms. 230 to 203 are the wider levels that I see, but currently the range is even narrower. So let's draw narrow lines here and here. Okay, so currently the range is even narrower, 201.15, let's say, to 202.70. But I'm not sure these lines are that important. More important lines are 203 to 2. Yesterday we had oil inventories. They grew once again. I don't think it's supportive of oil. Of course, I mean, there's just too much oil floating around. And even if there's a better atmosphere in markets, it doesn't support a stronger oil price. So in general, I see the pound strengthening also against the Canadian dollar. Wider levels here, 198 on the downside and 206 on the upside. Another question from Paul. Good morning, Paul. Dollar CAD looks bullish to the 134 level plus. What do you think? Yeah, we talked about the Canadian dollar just now. Let's look at what's going on. First of all, the Canadian dollar didn't have such a bad week so far because it dipped all the way. It dipped below 131. It's a bit choppy. We had it move last week. Canadian dollar roller coastering around oil prices, around the Fed. You can see this move here. Quite wild what we had last week. Then this week we had these kind of moves. Currently 131.50. It's sort of shattering all these lines here. 131.60, 132.40 is the next resistance line, and then 132.80, the downside 130. Will it reach 134? A lot depends on Canadian employment figures that we have tomorrow. In general, I do see the US dollar is continuing to strengthen, so there is potential. 134.60 is the 11-year high in dollar CAD, or the 11-year low in the Canadian dollar. Let's look at the price of oil. Yeah, oil fell from the highs. Maybe we're seeing here some kind of head and shoulders pattern, if you wish. Anyway, we reached on WTI crude, we reached 48.30, and now we're back down to 46. Support, we had this nice break above 47, only to get topped out right here, and now we're back to 46. 45, 33 is important support, and then 42.50, 47.30. Ah, yes, I said that. 48. Okay, so I'm relatively bullish on dollar CAD because the Canadian economy is slowing, and because of the strength in the dollar, and of course oil prices. I think they have room to fall to the previous levels, at least, perhaps not to crash, but they're a bit too high. Okay, next question. What about dollar yen from Patrick? Good morning, Patrick. Dollar yen managed to break above this, let's call it a double top here at 121.50. Currently 121.65. The high has been 184. 122 is resistance, so we're getting very close to that level. Why is this resistance? Because it was resistance. No, it was support back here in the summer. Okay, the next levels are much higher. Let's do some adaptations. We haven't talked about higher levels in dollar yen for quite some time. So it's 123, the next level to watch, above 122. Lots of round levels. 124.50, and then 125. It's not really resistance, but it's eyed by many traders, many politicians as well, of course, and the high of the year, of the decade, perhaps, if you wish, 125.80. So these are levels to the upside on dollar yen. 121.50 turns into support, followed by 120. And of course, well, the Bank of Japan didn't do anything. It's mostly now dollar yen is driven by US dollar strength. Okay, I see more questions. Another one from Serap, also Euro Pound. And see more questions. Good morning, Vedran. Good morning, Alexei. This is a live session, what you're watching now. That's why I respond to questions. But there is some kind of delay between the time that you write the when you write the questions, I see them immediately, but there is a delay between the time I talk, and the time you see you hear what I say, see what I say, see the screen. Okay. Anyway, Euro Pound, impressive fall. This is a daily chart. We had, well, it's not a one-way street, but in general, the trend in the last 10 days or so has been more or less 3 days down, or 2 days down, 1 day up, and down days are stronger. So 70.60 is current level, 70.64, 70.40 is the low, getting close to support there at 70.25. And then 69.40 is the next support line. Resistance at 71.40, and then followed by 72. Euro Pound is a clear case of monetary policy divergence. Very easy. In the Eurozone, we're expecting more printing of the euros and the lower even lower negative deposit rate. And in the UK, we're expecting a rate hike. Not so soon, perhaps only in 6 months, 9 months, but it's diverging monetary policy, and it's in play. It isn't always, of course, a one-way street. We've seen the pair covering. I think there's a bit more potential to the downside. Today, the focus is on the Bank of England, and tomorrow, a positive figure from the non-farm payrolls could also indirectly help the pound. Okay. So I hope I answered all your questions. Let's talk about other events and currency pairs. complete the gaps, the currency pairs we haven't talked about, or the events we haven't talked about. And of course, I'm waiting for more questions. I'll be glad to answer. So after we have all this Super Thursday from the UK, we have jobless claims in the United States, weekly release. It doesn't really serve as a hint towards the non-farm payrolls, but it's still because the non-farm payrolls report is already ready, but it's still of importance to the US dollar. In the past weeks, we had good levels, means very low levels, under 260 a few times, lowest since 1973. It's not a one-way street as always, but the trend is down. Now we're expecting more of the same, a small rise from 260 to 264. And continuing claims, they also dropped quite a bit. I don't have figures here. For some reason anyway, 2.14 million, and perhaps we'll have a similar figure. These are low figures of unemployment, which is positive for the United States. Okay, we also have a few other figures from the United States, non-farm productivity, unit labor costs. The most important one is, well, it's not that important, but labor unit costs are important because they show how much it costs to employ someone, and that's also another sort of indirect measure of wage inflation. So it's also of importance. It's for the third quarter. It's a quarterly release. Last time we had a drop of 1.4%. This time a rise of 2.3 is expected. Anyway, it's a mix of data, productivity, labor costs, jobless claims. We need all figures to go in one direction to have a really strong impact. So if all of them are positive, it's of course dollar positive. If not, it's of course dollar negative. That's at 1:30 GMT. But at the same time, we have perhaps a more important event. Bill Dudley, the president of the New York Fed, number 3 at the central bank, speaks once again. Out of all three, Yellen, Fisher, and Dudley, the top three, Dudley has been sort of more dovish. Let's see if he repeats the same sort of more balanced approach, or a bit more hawkish like Fisher or Yellen. Okay, we have Fisher talking once again. He out of the three, he's a bit more hawkish. He's the vice chair, number 2. And we have much later at 6:30 GMT, Dennis Lockhart speaking. He's the president of the Atlanta Fed, and he is hawkish. Okay, and more events at midnight GMT. For those of you trading the Australian dollar, we have a quarterly report from the RBA. Let's see how they see the economy if they want a weaker Australian dollar, and that's a good segue to talk about Aussie dollar. We haven't talked about that. Okay, Aussie dollar also hit by US dollar strength. 71.40 is the current level. I did make a few attempts to break above 72. It had good reasons to do that. We had the RBA early in the week not cutting rates, being a little bit more optimistic about the economy. Data from China has been positive. We had from China both the manufacturing and the services PMIs come out better than expected. Anyway, support at 71.10 and then 70.65, followed by the round number of 70, and then double bottom here at 69.35. On the upside, we have 72. I still see it as resistance, and 72.80. Okay, I don't know how many of you are trading the Aussie dollar. It has been, well, I find it an interesting currency pair. Kiwi dollar collapsed below support. Support was 66.15. Double bottom here and here. We had a good feeling about New Zealand for quite some time, but then we had this terrible Tuesday, if you wish, for for New Zealand, that we had both milk prices fell around 7%, and also employment dropped 0.4%. Bad news for New Zealand, we had it fall. It didn't collapse below 66.15, but yesterday's good figures from the US already made the difference, and we have the pair under 66. Next support line is right here at 65.30. 66.15 turns into resistance, and then it's followed by 64.75. Okay. Let's talk about more currency pairs. I'm looking forward to your questions. Dollar Swiss also made a break higher. 99.80, almost 80 is the high, getting closer to parity. Remember, this pair depends on a currency that doesn't exist in the pair. So dollar Swiss depends on euro and the euro, okay? Because the Swiss National Bank is intervening to weaken the franc against the euro. And if the euro falls, the franc falls, okay? So 99, almost 60 is the current level. Parity is, of course, resistance. 99.50, we're close to that, serves as some kind of support. On the downside, we have 98.80, okay? Is that the work of the Swiss National Bank right here, this rise here of Euro Swiss? Perhaps, because once again, we've seen Euro Swiss fall because the euro fell, and then we are seeing it move higher. I don't know this for a fact, but it looks very, very suspicious to me. Okay, 107.50 is the low, and sort of the lower resistance line, and let's put resistance, lower support line. Resistance is here at 108.40, more or less. But anyway, this is a problematic pair. I have a question from Fabian. Do you think euro dollar will make a correction and retrace today because of participants waiting for the NFP, or will it make new lows due to the hawkish speak during today, which could put more pressure? Good question. Yeah, we have seen euro dollar fall quite a bit, so perhaps we'll have a correction, right? We need bad news from the United States for that to happen. 109 is of course resistance. We could see some kind of profit taking. Let's see what we have. I'm not sure that we'll have too much of a profit taking because the figures today from the US will probably not be that terrible. We have more people from the Fed speaking, so I think the pressure will continue. So perhaps a breaking below 108.10, which is the next support I see, will be hard today because we're waiting for the non-farm payrolls tomorrow. But I don't see the pair recovering too much. Let's say if we do have this kind of big retracement, big correction above 109, perhaps we'll reach 109.50. I don't see that moving higher. I see the pressure continuing. Let's say a better chance than not that euro dollar will fall under 108.10, then rise towards 110. Okay, my bias is bearish at the moment, especially after we receive these bad figures from Germany. Okay, euro ruble. It's an interesting currency. Never talked about that. Not really aware of the levels, but let's take a look. Question by Vedran. 68.80 something. Let's draw some lines here. So we did see, yeah, currently we're in this kind of range between 67.50 and 69. Last year we had lots of excitement with the ruble, with the fall in oil prices, with everything that the central bank in Russia did. 71.20 is the next. Sorry, 71 is the next level, and above that we have 72.70. So these are the levels that I see in euro against the Russian ruble. In general, oil prices, the Russian ruble depends a lot on oil prices. If we have another weakening of oil, as I suspect, we could have a euro ruble moving higher, despite a potential fall in the euro. But I must say, I don't follow this currency that closely. Currently, it's trading in a very nice range. Relatively easy to see the support and resistance lines within this range. So these are the levels to watch. Next question by Paul. Why is the S&P trying to weaken the Swiss franc against the euro? Well, Switzerland is, well, if you look at the map, it's just in the middle of the, surrounded by Eurozone countries, so most of its trade is with Eurozone countries. And if it has a weaker franc, then, of course, it has more competitive exports. Now, during over 3 years, 3 years and 4 months, it had this peg. Euro Swiss was pegged to the to 120. To 120 was the floor. Let's show you this crazy chart. Okay, this is these 3.5 years from here, September 2011, up to here, up to January 15th, 2015 at 10:30 here local time. That's an event I certainly remember. They held this peg, and they were on the bid on the euro, trying to keep the franc low, trying to push Swiss inflation higher and Swiss exports. And eventually they gave up, especially as the ECB was gearing up towards QE, and we had this huge crash. It crashed a few Forex brokers as well. Since then, they did say they're intervening. It's not a secret. They're trying to weaken the franc, but they don't have a clear target. Okay, so this is what's going on. That's why I don't like the Swiss franc too much, because you can never know when they're intervening. They don't have a target. I would prefer that they would not intervene at all. Anyway, in recent months, these are the levels. We've seen it stabilize between 107.50 more or less and 110. Anyway, it's not currency pair I like too much. Okay. Any more questions? Of course, your questions are always encouraged, and fundamentals, charts, what have yous. Let's look. Let's do some small recap of what we had this week and what we'll have tomorrow, of course. So far this week, we had on Monday good figures from China, pushing the Australian dollar higher. Weak manufacturing PMI from the United States that hurt the dollar. It showed a loss in jobs. On Tuesday, we had an Australian rate decision, was relatively upbeat. Draghi repeated his pressure on the euro. New Zealand employment data was bad. It hurt the Kiwi. Then on Wednesday, we had the US dollar day yesterday. Upbeat testimony by Janet Yellen. Okay, ADP NFP. Excellent ISM non-manufacturing PMI. Main reasons for a stronger US dollar. And today we have the rate decision inflation report. Tomorrow we have NFP and Canadian jobs reports. See more questions. So does the SNB keep propping the euro up contrary to fundamentals? Yes. Look, the euro, the circulation of the euro is much larger than the circulation of the Swiss franc. So if the Swiss franc buys euros, it pushes the euro a bit higher, but not as much as other movements in markets. Actions by other central banks, actions by traders, speculations, imports, exports. It's the number 2 currency in the world, the euro, and the Swiss franc is number 7 or 8, I think. So they do support the euro a bit, but it's not as strong, because you see euro dollar is crashing, and it's not, the Swiss National Bank cannot do much. So it's small interventions, okay? So yeah, it's contrary to fundamentals. Many central banks do things that are contrary to fundamentals because they want to change fundamentals. They want to improve the situation. For instance, in the euro, the Eurozone, Mario Draghi is printing euros, and one of the reasons, he doesn't say that out loud, but is to weaken the euro, so that European exports are more attractive. If somebody buys a car, not Volkswagen, but Mercedes, for instance, in the United States, and it costs less in dollars, it makes it more attractive. More people buy more Mercedes, right? Or Spanish wine, or French cheese, or I don't know, anything, okay? And the same thing with inflation. A weaker euro means imported goods are more expensive, and that pushes inflation higher, and that's the target of the central bank. Okay, another question from Pound Yen and S&P. Okay, Pound Yen, we talked about that. Let's talk about that again quickly. Pound Yen, well, it's generally in an uptrend. This is the daily chart since early October, the past month or so. So rising all the way from 182 to 187.30 at the moment. 182.10 is resistance. 186, I still see it as support, relatively weak. If we do get a huge break, let's say the Bank of England is extremely hawkish, an unexpected scenario, then we have here 191 as very strong resistance. Okay, separator of ranges. All in all, 188.10 is very strong resistance as well. I see the pair is moving higher. Today, the focus is, of course, the Bank of England. S&P 500. Let's talk about that quickly because we focus on currencies, not stocks. Moving higher. Has this sort of double, sorry. The range is 2040 to 2140. Currently 20, just under 2100. On the downside, we have 2000. It had traded in range, fell quite a bit, now moving higher. In general, there's a better mood in markets, so that's, of course, positive for stock markets worldwide. But, of course, stock markets also move because of individual stocks, earnings reports, and I don't really focus on that, so I can't tell you too much. Just the technicals, the ranges 2040 to 2140, these are the levels to watch. Currently, we're closer to the higher end of the range. That's it. Dollar yen. We talked about dollar yen earlier. Let's do a quick recap. 121.73 broke out of range, broke above double top at 121.50, 122, 123, and 124.50 are resistance lines. A lot depends on the non-farm payrolls tomorrow. Japan is in the back burner. The pair now moves much more according to what's going on in the United States, because the Bank of Japan last week decided not to act, and until they'll move something, it'll take quite some time. So focuses on the December meeting. Support at 120, perhaps another minor support line at 120.60. A question. So that answers your question, Muru. Answered Sarab, Vedran, and now question from Fabian. If the Bank of England pushes the pound higher, Euro pound will go down today, right? But would the Bank of England's decision influence also euro dollar due to euro pound correlation? Or is there no relation between the Bank of England decisions to the euro? Great question. There's always some kind of influence, because not only because of the, let's say people buy the British pound, and so people buy British pound, so also against the euro, so it also has an impact on the euro. That's right. But the bigger picture here is that if the pound is really hawkish, as I think, or a little bit hawkish, they'll be very careful, of course, but if they're a little bit hawkish, then we could have also expectations. This fuels expectations for the Fed to raise rates, because they're sort of moving, expected to move in tandem, the Fed and the Bank of England. And this could also strengthen the dollar across the board, and sort of an indirect secondary effect. Okay, so in this case, yeah, so in this case also euro dollar could go down a bit. Okay, so sometimes we see the euro and the pound trading in sort of more or less in tandem against the US dollar. I don't think this is the case today because of this monetary policy divergence, because euro, there are two camps in the world. I mean, if we do it very simplistically, the Fed and the Bank of England are about to raise rates, and on the other hand, we have the ECB, Bank of Japan, others looking to cut interest rates, more QE, things like that. So because of this monetary policy divergence, I think that a hawkish Bank of England will be also will have a small secondary effect, weakening euro dollar. If they're dovish, and that's certainly a possibility, then of course it'll go the other way around. So I hope this answers the question. Okay, thank you everybody for the questions. It's time for the wrap up for today. So this is the wrap up for Thursday, November 5th. We had lots of action, a stronger US dollar in markets, and today we have Super Thursday and tomorrow's NFP. So what happened? Why is the dollar stronger? 5 reasons. First of all, ADP NFP came out as expected. Finally, no bad news. And then we had a beat. ISM non-manufacturing PMI came out way above expectations, including the employment component, and that raises expectations for the non-farm payrolls. And for December hike, talking about December hike, we had the 3 top people at the Fed all being relatively upbeat. Yellen said December is live. Fisher is okay with inflation, said December is live. Dudley was a bit behind, number 3, and also said December is live, but sort of had some worries also. But also, in general, he's lining up, and we have higher chances of a rate hike in the United States because, and let's see here, these are the implied probabilities, 56% chance of rate hike. It was around 50-50 yesterday, okay? So that's why the dollar is stronger across the board. In the UK, it's not that strong against the pound because we had good figures also from the UK yesterday, and today we're expecting Super Thursday. 3 events today in the UK. Rate decision, meeting minutes of that rate decision, and the quarterly inflation report. I believe we'll have a slightly more hawkish central bank in the UK, but the voting pattern isn't expected to change from 8 to 1. The Bank of England is likely to raise rates after the Fed. 153.60 to 155 is the current range in pound dollar. We talked about a stronger dollar. It's expressed very nicely in euro pound. Well, during the show it is strengthened just a bit, but in general we fell under 109. Next support 108.10, which is really critical. Resistance 109, 110. 110. Pound yen rose, made a break above 121.50. Next resistance 122, and then 123. 120.60 and 120 are lines of support. Dollar CAD strengthening. Oil prices are falling. Stronger US dollar. Tomorrow we have Canadian figures. So we're currently 131.50. 132.40 is resistance. 131 support. Aussie dollar 71.35. We have the Australian monetary report later in the night. 71.10, 70.60 support, 72 and 72.80 resistance. Kiwi dollar lost support at 66.15. Further support 65.30, resistance 66.15 and 67. So we have other main events today. For the wrap today, we have Draghi speaking for the 3rd time. Let's see, you already heard the euro this week, and then in the second appearance he didn't say anything monetary policy related. And at 12 GMT we have all this Bank of England blitz continuing at 12:45 with the press conference by Carney. Lots of figures from the US today, but not that important as that we had yesterday. Jobless claims, unit labor costs, and more Fed speak. William Dudley at 1:30, Fisher at 2:10, and Lockhart at 6:30. So lots of action going on in markets. Stronger US dollar, pound on the agenda today. Let's see if we continue seeing the strength. First week of the month is always busy. Yesterday was a very busy day. I believe today will be the same. And tomorrow we have the climax with the non-farm payrolls. So thank you everybody for coming. I'm very glad we had all these questions. I hope I managed to answer all the questions. And you're welcome, as always, to the show. So thank you very much. And successful and happy trading to all. See you. Bye-bye.